So let's talk about Virgin Galactic for a bit and look at some realistic expectations for this company. And currently, I'm invested in Virgin Galactic, so I think it should be noted that I still love this company and think that they're going to do extremely well long term. So while Virgin Galactic's story is definitely exciting and I'm bullish long term, I also think it's important to understand other aspects about this company and the challenges that they still face. So if you guys appreciate these kinds of realistic approaches to companies like this, please let me know. So while Virgin Galactic is still not a profitable company yet, I'd say their biggest competition right now is Jeff Bezos's Blue Origin that has the potential to take away a lot of new market share for space tourism.
Hell yes.
And about a month ago, Virgin Galactic dropped a bombshell. It's been over a year since Virgin Galactic last sent a space plane to space. That happened last July, when the company founder Richard Branson celebrated Virgin's receipt of a full commercial launch license from the US Federal Aviation Administration by taking a joyride to the edge of space and back. But since then, it's been fairly silent. Regardless though, on July 14th of this year, Virgin Galactic announced a bold new plan to build a new factory in Mesa, Arizona, capable of churning out up to 6 new next-generation Delta-class spaceships each year to support the company's dreams of flying to space 400 times per year. And according to Virgin Galactic, the new factory is already under construction and will be fully operational by late 2023. But even if this is true, one of the biggest questions that I think a lot of people are asking is, will Virgin Galactic even resume launching by then? And on top of this, Virgin Galactic had pretty disappointing Q2 results. When Virgin Galactic reported its fiscal Q2 2022 earnings, which in actuality were more like losses, earlier this month, one of the biggest revelations was that Virgin Galactic is postponing its next launch yet again, and this time to Q2 in 2023, and actual commercial operations might be even further off. So Virgin Galactic's been making upgrades on both the VSS Unity spaceplane and the VMS Eve mothership in preparation for beginning commercial operations. But as their CEO Michael Colglazer explains, the work on Eve in particular is taking longer than expected, and because Unity depends on Eve to carry it to the altitude before it can blast off to space, any delay in the latter prevents the former from resuming its test flight schedule. So what's the result of this? Well, resumption of test flights of Unity could still be nearly a year away, and because actual commercial service can't begin until the test flights are actually completed, that probably means investors will need to wait at least another year before Virgin Galactic can start charging passengers for their tickets and generating at least decent levels of revenue for the business. So with that said, if you're an investor in Virgin Galactic, here's the truth that you need to understand. When they reported their most recent earnings, Virgin Galactic confirmed that its Q2 revenue was less than $500,000, while losses for the quarter approached $113 million, which is roughly 43 cents per share. And again, that's roughly 20% more money than Virgin was losing even a year ago. And of somewhat greater concern, Virgin Galactic is burning through its cash reserves at a pretty substantial rate right now, as it's spending heavily to upgrade its existing spaceships to prepare to build even more. Negative cash flow for the quarter approached $160 million, which was up 38% from a year ago. Granted though, Virgin Galactic does still have approximately $1 billion in cash and securities, and according to management, cash burn should start to decrease a bit in Q3 of 2022 to no more than $120 million. That's only true, however, if you assume that Virgin Galactic won't suffer any more delays to its flight schedule, and that it will resume test flights in Q2 of 2023 as promised, and that it will proceed swiftly to begin commercial operations no later than the latter part of 2023. Any longer, and Virgin Galactic could face a pretty tight cash squeeze. Anticipating this eventually though, management did announce plans to sell another $350 million worth of stock, which would cover another couple quarters of startup costs if Virgin needs them. However, there is some good news in all of this. Assuming that Virgin Galactic can keep its promise, the company should have enough cash to remain solvent for another 6 quarters, which is long enough for the company to begin generating revenue from space tourism flights to offset all these costs, which, to be honest, I think Virgin Galactic will have no problem pulling off. So, long story short, Virgin Galactic appears to have plans in place to ensure that even if commercial operations don't begin for another 2 years, it will have the money it needs to survive until then. I just think right now, we as investors should really hope that it doesn't take any longer, because as Virgin slowly crawls towards commercial operations, its arch space rival Blue Origin is sprinting ahead. You see, Blue Origin just conducted its 6th successful crewed spaceflight on August 4th, which ironically enough was the same day that Virgin came out with its financial report. Mind you, Blue Origin still isn't saying how much it's charging its passengers for a ticket aboard its space rocket, which at this point is going to make it hard to say if it's overpricing or undercutting their rival Virgin Galactic. Overall though, with Virgin Galactic's new Arizona factory and them seemingly having enough cash reserves to get by for now, I'm still bullish on Virgin Galactic and will continue to hold their stock because I think they're a bet worth taking. And I think that'll wrap up the video for today, guys. Thanks as always, and I'll catch you next time.